Hey crypto friends, my name is Garrett and welcome to Altcoin Radar. Today guys, we're going to talk about RSI, the RSI trading indicator, and I'm going to give you a super in-depth explanation on how to use it at the best possible way. And guys, I'm going to show you some examples on how to use it as well. So guys, without wasting any time, we're just going to dive right into this, all right? So here's the thing, you guys. I get hit up quite often about there's a lot of people who notice that I'm a huge RSI trader. I mainly only use RSI and MACD. So I get a bunch of people who ask me, how do you do it? How are you able to trade so often and make profits so often by just using RSI? Well, I'm going to show you in this video because I'm going to get in depth and we really want to show you exactly how to do this, all right? So guys, what exactly is the RSI? Do you even know? That is really the first question most people probably have. You know, a lot of people think they might know based off of reading some articles here and there, but you really don't start to really understand it until you start to see actual examples in real time, okay? So guys, here's the basics, okay? I'm just going to give you some basics here real quick. So the basics are, you guys, is RSI is pretty much short for Relative Strength Index, okay, which is basically a momentum indicator that's used in technical analysis that measures recent price changes to simply evaluate overbought and oversold conditions in the price of whatever type of asset that you're trading. And guys, it's displayed as an oscillator, which, if you don't know what that is, it's basically a line graph that moves between two extremes. Sorry, I'm losing my words there. It's basically a line graph that moves between two extremes and can have a reading anywhere from 0 to 100. In addition, you guys, on a bare bones level here, RSI that has a value of 70 or above, it usually indicates that whatever type of asset you're trading is becoming overbought, okay? And it may be primed for a trend reversal or a corrective pullback in price. And on the other hand here, you guys, RSI readings of 30 or below usually indicates an oversold or undervalued condition. So guys, that's pretty much a bare bones definition of RSI, okay? Because it's very important to know the actual definition on a bare bones level to really understand, you know, how this is all working and how it all ties into things. So, but guys, now you might be asking yourself, you know, what does the RSI actually tell you, right? I mean, hey, that's the first thing I kind of thought too when I was first learning about it as well in the very beginning, you know, years ago. But guys, think about it this way, okay? The overall trend of an asset that you're trading is an important tool simply in making sure the RSI's readings are, you know, properly understood. For example, you guys, an oversold reading on the RSI is typically an uptrend in, you know, a much higher than 30%, and that overbought reading on the RSI during a downtrend is much lower than the 70% level as well. Generally here, you guys, when the RSI starts to climb above the 30 levels, you know, we're talking here, like right here, you guys, I've got my RSI right here, this long dotted line is the 30 level on the RSI. When it starts to climb above the 30 levels, it's typically a bullish sign. And guys, when it starts to slide below the 70 levels, which is, again, you guys, this dotted line right here, when it starts to climb below that dotted line or below that 70 level, like you can see here, it's typically now a bearish sign, okay, as you guys can clearly see here. All right. Now, guys, when we're talking about trends, though, the RSI may fall into a specific range, okay? Like during, you know, for example, an uptrend, for example, the RSI tends to stay above 30, and it should frequently hit 70 when it's in an overall uptrend. And guys, the same thing is true with a downtrend as well. So it's pretty rare to see the RSI exceed 70 in a downtrend. And the indicator usually frequently hits 30 or below, which is, you know, what we've been seeing a lot lately in this current bear market that we're in right now at the time of me filming this video. We can clearly see that in this downtrend, the RSI has not really hit 70 on the daily chart whatsoever. And that's simply because we are overall in a long-term downtrend right now, you guys. So that's why we haven't seen it, you know, reach those 70 levels. And that's what I'm talking about here in the overall trend we are talking about here. Overall, though, you guys, these guidelines that I'm giving you can definitely help you to determine the overall trend strength and be able to spot potential reversals as well. For example, you guys, if the RSI can't reach 70 on a number of consecutive price swings during an uptrend, but then it drops below 30. It typically means that the trend has weakened and it could be reversing lower. And the opposite is true for a downtrend as well, you guys. If the downtrend is unable to reach 30 or below, and then it rallies to above 70, that downtrend typically has weakened and could be reversing into the upside. So that's kind of where we get to see the main differences here, you guys. So guys, now I'm going to move on to some examples of RSI divergences, okay? So guys, overall here, a bullish divergence typically occurs when the RSI creates an oversold reading followed by a higher low that matches correspondingly lower lows in the price. And guys, this usually indicates rising bullish momentum, and a break above oversold territory, could be used to trigger a new long position as well. So guys, now, for a bearish divergence, typically occurs when the RSI creates an overbought reading followed by a lower high that matches corresponding higher highs on the price. Okay, now I know that might seem a little bit confusing, but I'm going to show you an example here real quick. Okay, so we'll go to this very first example I've got set up for you guys here. All right, so as we can clearly see, you guys, in the chart that I have here, a bullish divergence right here, we can clearly see the bullish divergence. The bullish divergence is identified when the RSI, formed higher lows as the price formed lower lows. So as you guys can clearly see here, the rising RSI, we got the rising RSI right here, and we've got the lower, sorry, I'm completely confusing myself here. And we've got the higher lows being formed, as we can clearly see here as it's going upwards, you guys. So that is a perfect example of what I'm talking about here. Now guys, now we are going to look at a example of an RSI swing rejection, okay, which is typically another trading technique that it pretty much examines, the RSI's behavior when it's re-emerging from, overbought or oversold territory. And this signal is typically called a bullish swing rejection, okay, and it typically has four main parts, okay? Number one is the RSI falls into oversold territory. Number two, the RSI crosses back above 30%, which is, again, this 30 line down here, the dotted 30 line, all right? So let me go back to here. And then number three would be when the RSI forms another dip without crossing back into oversold territory. And then number four, you guys, we've got the RSI then breaks its most recent high, okay? And as you guys can see here in the next chart that I have here, let's see the chart. So here's the next chart I have here. So as we can clearly see here in this chart, you guys, the RSI indicator was oversold, as we could clearly see right here with the number one position in the dotted line down here. It was oversold and it ended up breaking through the 30 level. And then, you guys, we can clearly see that it formed the rejection low that triggered the signal when it bounced higher, okay? And also, guys, like divergences, there is a bearish, there's also a bearish version of the swing rejection signal that looks like, it looks pretty much like a mirror image of this bullish version as well. And you guys, a bearish swing rejection also has four parts as well. Typically, what it is number one, the RSI rises into overbought territory. Number two, the RSI crosses back below 70%. Number three is when the RSI forms another high without crossing back into overbought territory. And then you guys, we got number four, which is where the RSI then breaks its most recent low, okay? Now guys, in this chart, right here, we can clearly see this happening, okay? We can clearly see that the bearish swing rejection signal, and as with most trading techniques, this signal will most be reliable, when it conforms to the prevailing long-term trend as well. So again, you guys, we're talking about the overall long-term trend here, okay? So it's important to be looking at all of this when you're, when you're trading and you're trying to figure out and trying to trade with using RSI. But guys, by now, you guys, you might be thinking that using RSI alone might be a great idea. And for some people, it's definitely possible to use RSI, only the RSI, when trading. But keep in mind here, you guys, that the RSI does have its own limitations of its own. So realistically here, the RSI compares bullish and bearish price momentum. And what we can clearly say about this, you guys, is, even though it, creates bullish and bearish price momentum and displays the results in what's called an oscillator, that can be placed, beneath a price chart. And like most technical indicators here, you guys, its signals are most reliable when they conform to the overall long-term trend, like we've been talking about a lot in this video so far. In addition here, you guys, a true reversal signal are, true reversal signals, they're very rare and can definitely be difficult to separate from false alarms as well, and false positives too. For example, you guys, an example of this, of a perfect example of this, you guys, would definitely be, let me think here, it'd be pretty much like when it would be pretty much when a bullish crossover, when you have a bullish crossover followed by a sudden, and I mean sudden decline in whatever asset you're trading, okay? And a false negative would typically be a situation where there's a bullish crossover, yet the asset that you're trading suddenly accelerates, upwards pretty much. Overall here though, you guys, since the RSI displays momentum, keep in mind here that it can stay overbought or oversold for a very long time when an asset has, significant momentum in either direction. Therefore, you guys, the RSI is most useful in an oscillating market where, the asset price is alternating between both bullish and bearish movements. So typically when the market is, typically not in a bear market, but yet not in a full out bull market either. Typically when, the scales are kind of evened out, okay? Now, guys, before I go ahead and wrap this one up, let me just say that some traders will consider it a buy signal if an asset's RSI reading moves below 30, simply based on the idea that this asset has been oversold and is therefore poised for a rebound. And I have said this and mentioned this in a lot of my previous trading videos as well. But there's a lot more to it, you guys. The reliability of this signal will definitely depend in part on the overall trend here, you guys. It's going to depend on the overall trend that the asset is going through. And guys, this is literally the most important part about using the RSI indicator too. So guys, you must identify the overall trend before making any buy or sell decisions. But overall here, you guys, that's going to pretty much do it for this video. So, hey, I will go ahead and wrap this one up. But again, guys, before you guys leave, go ahead and make sure to subscribe to this channel so that you never miss a new crypto and altcoin video from me on a regular basis. And hey, guys, with that said, thanks again for watching, and I hope to see you guys in my future videos or chatting with me here on Twitter.